All right, let's dive right in. Today, we are cracking the code on what trips people up on the big financial planning exams. Think of this as your own personal coaching session. We're going to deconstruct some of the toughest problems out there, the ones that are designed to make you panic, and we're going to turn them into puzzles you can actually solve. Let's get to it.
Okay, so picture it. It's exam day. You're just getting into a rhythm, and then bam, this monster of a question pops up on your screen. It just looks like total chaos. Your heart starts to pound. You can feel that wave of panic rising. What do? Do you guess? Do you just freeze up? What's the move?
You know that moment of panic? That's not an accident. These questions are built to overwhelm you. But here's the secret. The key isn't memorizing every single formula under the sun. It's about having a system, a calm, strategic way of thinking that lets you slice right through all that complexity.
And that is the goal here. By the end of this, when you see a question like that, you're not going to panic. You're actually going to feel a little spark of confidence because you'll know exactly how to attack it. And just as important, you'll know when it's smart to just walk away.
So let's open up our first case file, the one everyone dreads, the three-step education funding question. So you've got a client, they want to save for their 5-year-old's college education. Right now, it costs 20 grand a year, but that cost is growing. And their investments? They're earning a nice return. So the big question is, how much do they need to be saving every single year?
Now, before we even think about touching a financial calculator, let's just use some common sense. First, you'd ask, okay, what's college actually going to cost when my kid finally gets there? Then, all right, so how big of a pile of money do I need sitting in the bank on day one of freshman year? And finally, got it, so how much do I have to save each year to get to that number? That's it. That's the whole problem right there in 3 simple logical steps.
Now, this is where it gets tricky and where most people get tripped up. It's a chain reaction. The answer from step 1 feeds right into step 2, and the answer from step 2 becomes the big goal for step 3. But here's the twist that catches everybody. A future value in one step might suddenly become the payment or the present value in the next. If you don't follow that story, that narrative, you are going to get totally lost in the numbers.
And you can see that point perfectly here. Notice how the interest rate you're using changes? It's not constant. In step 1, all you care about is how fast tuition is inflating. In step 2, you have to use the real rate of return. That's the difference between your investment growth and inflation. And then in step 3, you're back to just looking at your investment return. The variables literally shift with each chapter of the story. It's not one giant calculation, it's 3 separate mini problems.
All right, case number 2. Let's talk about the real estate swap, also known as a like-kind exchange. Your client, we'll call her Sarah, is trading her home in Tahoe for a beach bungalow, plus a nice chunk of cash. And the exam asks you for the recognized gain. Sounds easy enough, right? But this is exactly where IRS jargon is designed to trip you up. So the absolute number one thing to get straight is the difference between these 2 types of gain. Realized gain is the actual real-world profit you made. It's the number you'd brag to your friends about. But recognized gain, that's a very specific IRS term. It's the part of that profit that they are going to tax you on this year, and they are almost never the same thing. Let's just look at Sarah's deal. Her realized gain, her actual profit, was an incredible $500,000. But because this was a like-kind exchange, the IRS lets her push off paying taxes on most of it. Her recognized gain, the part that's taxable right now, is only $150,000. So why that specific number?
Well, the answer comes down to this number right here, the $150,000 in cash she got. In these kinds of exchanges, any non-property thing you get, and it's usually cash, is called the boot. And that boot, well, it's the key to the whole puzzle.
And here it is. This might be the single most valuable shortcut you can learn for this type of problem. The recognized gain is technically the lesser of the boot or the realized gain. But you know what? 9 times out of 10, it's just the boot. When you're under the gun, that is a fantastic rule of thumb. Okay, let's tackle our final beast, the generational gift maze. Elizabeth gives a whole lot of cash to her grandson, and the question asks for the total federal transfer tax. Now look closely. There isn't a ton of math here. That's because this isn't a calculation problem, it's a logic problem. It's designed to see if you get how all these different tax systems crash into each other. When you see a question like this, your very first move should be to organize the chaos. The exam really wants you to know 4 main tax systems. You've got income tax, gift tax, estate tax, and the generation skipping transfer, or GST tax. Those are the 4 walls of the maze.
So here's the secret map that gets you through this maze. The gift and estate taxes are what we call unified. Just think of them as drawing from one single bucket of exemptions. But the GST tax? That's totally separate. It's an additional system with its very own bucket. It's there to make sure the IRS gets its cut at each generation, so people can't just skip over their kids to dodge a round of estate tax. So even though the big lifetime exemption numbers and that 40% tax rate look the same, they're actually being applied to two separate pools of money. So when Elizabeth gives that gift to her grandson, it uses up some of her unified gift and estate exemption and her separate GST exemption. It's a double hit. And that right there is the key insight.
So, we've just broken down 3 ridiculously tough problems. But now we need to talk about the most important lesson of all, the one that goes way beyond any single question. We need to talk about strategy.
Okay, this might sound like total heresy, but sometimes the smartest, highest scoring move you can possibly make on a beast like that 3-step education problem is to flag it, make your best guess, and move on immediately. This really comes down to the difference between book smarts and street smarts. Book smarts says you have to solve every single problem to prove you know your stuff. But street smarts? Street smarts says the real goal is to pass the exam, and that means you have to manage your single most important resource, your time.
And this really just says it all, doesn't it? These super complex, multi-step questions are often just massive time sucks. Getting bogged down for 10 minutes on one question means you might run out of time and miss 5 or 6 easy questions at the end that you could have answered in seconds. Don't let your ego cost you the entire exam.
So that really leaves us with one final thought. In a high-stakes situation like this, is chasing down the right answer for every single problem always the winning move? Or is the real victory found in knowing which battles to fight and which ones to strategically walk away from? That, right there, is the strategist's edge.